Hey everyone, hope you're having a great day, and welcome back to Whiteboard Invest Crypto News. Let's dive straight into today's top stories shaping the cryptocurrency landscape. First up, the latest Bitcoin price update. Where are we headed next? With market volatility on everyone's mind, it's crucial to stay informed. Transitioning to global perspectives, the IMF chief recently remarked that Europe looks like an ideas supermarket for the US, calling for further integration. This could have far-reaching implications for the global economy and crypto markets alike. In regulatory news, a U.S. judge has refused to dismiss the SEC's lawsuit against Kraken. This decision marks a significant moment for the exchange and could set a precedent for future cases. Moving on to stablecoins. Did you know that stablecoin issuers are now the 18th largest creditor of the U.S.? This development highlights the growing influence of digital currencies in traditional financial systems. Speaking of influence, MicroStrategy is making headlines again by continuing its Bitcoin buying spree, adding nearly 12,000 BTC to its holdings. Their aggressive acquisition strategy is something all crypto investors should keep an eye on. Finally, let's head to Canada, where the first Solana ETF is set to launch. This move could open new doors for investors and further legitimize Solana as a major player in the crypto space. All right, now let's delve deeper into each of these intriguing stories. Sit back, relax, and let's explore the dynamic world of cryptocurrency together. Today, Bitcoin is trading around $63,800, showing a slight decline from yesterday's price of $65,400. This price fluctuation underscores the inherent volatility of the cryptocurrency market. Several factors are contributing to this recent movement. First, the role of market sentiment cannot be overstated. News and events significantly influence investor behavior. For instance, negative regulatory actions, like the recent tightening of crypto regulations in certain countries, often create fear and lead to sell-offs. Conversely, positive developments, such as the potential approval of Bitcoin ETFs in the U.S., tend to bolster market confidence and drive prices up. Another crucial aspect is the supply and demand equation. With a capped supply of 21 million coins, Bitcoin's price is sensitive to changes in demand. Institutional interest from companies like Tesla and MicroStrategy buying large quantities of Bitcoin can push prices higher. Technological advancements in Bitcoin's underlying blockchain technology, such as improvements in security and transaction speeds, also play a significant role in enhancing its appeal and value. Looking forward, we can expect Bitcoin to remain volatile in the short term due to ongoing market sentiment shifts and news developments. Over the medium term, factors like clearer regulations and sustained institutional investments are likely to provide stronger support for Bitcoin's price. In the long term, Bitcoin's potential seems promising, especially as it continues to gain recognition as a viable asset class and medium of exchange, driven by technological innovations in the blockchain space. Overall, today's Bitcoin price is shaped by a blend of regulatory developments, market dynamics, and technological progress. While short-term fluctuations are likely, the medium to long-term outlook remains positive, driven by increasing adoption and interest from institutional investors. As always, staying informed and considering risk tolerance is crucial for anyone investing in cryptocurrencies. All right, next up, we're reacting to an interesting piece from CNBC where IMF Managing Director Kristalina Georgieva discusses Europe's economy. There are some intriguing insights here, especially for us in the crypto space, so let's dive in. Georgieva highlights Europe's strengthening economy and declining inflation. This stability is crucial for crypto adoption and growth, as it boosts confidence and investment in alternative assets like crypto. She emphasizes Europe's need to focus on productivity and tap into its single market potential. For crypto enthusiasts, this could mean better regulatory environments and unified crypto regulations. making it easier for crypto businesses to operate in the EU. Georgieva mentions Europe as an ideas supermarket for the US, where innovations are commercialized and scaled. Blockchain technology can help Europe retain its innovative edge, providing decentralized platforms for startups to scale locally. She also stresses the need for deeper financial market integration, which could lead to better liquidity and more robust crypto exchanges in Europe, attracting institutional investors and driving growth. The IMF projects a growth rate of 0.8% for the Eurozone in 2024, up from 0.4% in 2023, with a further increase to 1.5% the following year. This positive trend can create more opportunities for crypto adoption as businesses and consumers seek efficient financial solutions. In conclusion, the IMF's insights suggest a stronger, more integrated Europe that could benefit the crypto market. As Europe boosts productivity and innovation and integrates financial markets further, we could see exciting developments in the crypto space. Keep an eye on Europe, folks. Exciting times ahead. And next, let's dive into the recent news about the SEC's ongoing lawsuit against Kraken. This is a big deal, so let's break it down and see what it means for us in the crypto world. First off, on June 20th, Judge William Orrick proposed rejecting Kraken's motion to dismiss the SEC's lawsuit. The SEC claims that the digital assets Kraken offers are securities under the Howey test. They argue that Kraken functions as an ecosystem, providing these tokens as investment contracts, where users expect profits from Kraken's efforts. Kraken's defense, led by Matthew Solomon, counters that the SEC needs to prove how these tokens were traded on Kraken, not just label them as securities. Solomon also points out the unfairness of applying the ecosystem concept only to crypto, arguing for equal treatment across all asset types. Judge Orrick seems to find the SEC's arguments more persuasive, hinting that he might reject Kraken's dismissal request. If this happens, Kraken could face a prolonged legal battle, potentially impacting its operations and the wider crypto market. The community's reaction? Not great. Many, like user Chad Steingraber, feel the SEC's ecosystem argument is weak and are surprised it's holding up in court. Kraken's had a tough time lately. Earlier this year, they paid a $30 million fine for not registering their staking product as a security. Plus, they've dealt with security issues like a recent $3 million breach. However, there's some positive news in the crypto space. Consensus recently announced that the SEC ended its investigation into Ethereum, deciding not to classify ETH as a security. This win gives us hope for a more balanced approach in future regulations. In summary, the SEC's lawsuit against Kraken could have major implications. If the court sides with the SEC, it might lead to stricter regulations and compliance requirements for crypto exchanges. But it also highlights the need for clear, fair rules that apply equally to all assets. Next up, let's delve into some fascinating and slightly alarming news about the U.S. government's debt situation and the role of stablecoins. Let's break it down. So here's the deal. Stablecoin issuers like Tether and Circle now hold over $120 billion in U.S. Treasury bonds. This makes them the 18th largest creditors of the U.S., even surpassing countries like Germany and South Korea. Just Tether alone holds $91 billion, and Circle holds $29 billion in short-term U.S. debt. Now, why does this matter? Well, the U.S. national debt has skyrocketed past $34 trillion, and the government is paying a whopping $2 million in interest every minute. The Congressional Budget Office even predicts this debt could hit $50 trillion by 2034. That's 122% of the annual economic output. Experts are calling this a dangerous situation for the economy and national security. Yet the U.S. can't stop borrowing. The IMF is worried that this high debt and interest rates could lead to increased borrowing costs and global financial instability. But here's where it gets interesting for us in the crypto world. Some believe this debt crisis could actually push more people towards alternative assets like Bitcoin and gold. Circle's CEO even predicts that stablecoins could make up 10% of global currency in the next decade. That's huge. On the regulatory front, stablecoins are a hot topic in U.S. crypto legislation. There's hope that we might see stablecoin regulations passed by the end of the year, especially with optimism from lawmakers like Patrick McHenry. So, what's the takeaway? The U.S. debt situation is dire, but it could accelerate the adoption of crypto assets. Keep an eye on stablecoins. They're becoming a major player in the financial world. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. Switching gears. Let's talk about some major moves by MicroStrategy and their continued commitment to Bitcoin. Let's dive into the details and what this means for the crypto market. So, here's the big news. On June 20th, Michael Saylor announced that MicroStrategy purchased an additional 11,131 BTC, spending about $786 million. This brings their total holdings to a whopping 226,331 BTC, worth nearly $14 billion. That's about 1.1% of the total Bitcoin supply. Now, why is this significant? Well, MicroStrategy's average purchase price for this batch was $65,883 per Bitcoin, a strong indicator of their confidence in Bitcoin's future value. Over the years, they've invested around $833 billion into Bitcoin at an average price of $36,798 per BTC. Despite the volatile market, they've already seen nearly $6 billion in profit. What's really interesting is how they funded this latest purchase. MicroStrategy sold convertible senior notes with a 2.25% interest rate, initially planning to raise $500 million, but bumping it up to $800 million due to high demand. This strategic financial maneuver shows how traditional financial instruments can support major crypto investments. For context, Bitcoin's price has been fluctuating between $64,500 and $67,000 recently, and it's currently trading at around $64,190 or $46. These fluctuations didn't deter MicroStrategy. In fact, they've made 4 significant Bitcoin purchases just this year. Now let's talk implications. MicroStrategy's aggressive buying strategy reinforces the notion that institutional interest in Bitcoin is strong. It also sets a precedent for how companies can leverage traditional finance to back their crypto investments. Michael Saylor's unwavering belief in Bitcoin, despite the market's ups and downs, highlights a long-term bullish perspective. This could inspire other institutional players to follow suit, potentially driving more stability and growth in the market. In conclusion, MicroStrategy's latest move is a testament to their bullish stance on Bitcoin and a signal of growing institutional confidence in crypto. Turning to the latest crypto investment updates, let's delve into a significant development that could impact our portfolios. 3iQ Digital Asset Management has filed for the first Solana exchange-traded product, ETP, in Canada. If approved by the Ontario Securities Commission, this ETP, named the Solana Fund, will be listed on the Toronto Stock Exchange under the ticker QSOL. This fund aims to provide Canadian investors with exposure to Solana, SOL, without the need for hot wallets or blockchain technology, functioning similarly to an ETF. Additionally, it offers income from staking rewards generated by the Solana network. This filing marks a major milestone for 3iQ, a pioneer in the digital asset management space. Greg Benheim, 3iQ's executive VP, emphasized their commitment to offering high-standard, regulated investment opportunities in cryptocurrencies. Their track record includes launching publicly traded Bitcoin and Ethereum funds in Toronto, setting a strong precedent for their Solana venture. Canada has been at the forefront of crypto ETFs, approving Bitcoin and Ethereum spot ETFs since 2021, ahead of the U.S. This strategic move by 3iQ positions them well for potential regulatory changes in the U.S. market, as noted by Bloomberg's ETF analyst Eric Balchunas. Furthermore, VanEck, a major asset manager, has also shown confidence in Solana by launching a Solana ETF in Germany and predicting its rise in the ETF space by 2024. Currently, Solana is the fifth largest cryptocurrency by market cap, valued at $61.8 billion, although it has seen a slight dip recently. The introduction of the Solana Fund could enhance its visibility and adoption among institutional and retail investors alike.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.